Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis on crude oil WTI futures. If you're new to the channel, make sure to like and subscribe. And if you are a beginner trader, make sure to check out the link in the description that I left below. It is a link to create a new trading account on eToro. They have lots of good information for beginner traders. It's a really good broker to start trading with. It's the one I started trading with. So make sure to check that out. And without further ado, let's get right into it. So this is a daily chart of crude oil. And we've had a few developments lately. I think the last video I made was around here, right under the downtrend line we had here on the daily chart. And I said there would be probably a reaction off of this trend line, and that's exactly what we got. We got a big red candle. Now, this I consider to be some sort of a trap for traders. Considering a reaction with a big red candle off a downtrend line is a sign of a successful backtest, and usually a signal that the downtrend will continue, and that's what I mentioned in my video, that if we do get a big reaction, we'll likely continue the downtrend, and we just simply bounced off of the support and actually broke the downtrend line. But that is something that happens sometimes in stocks or commodities. You'll hit the downtrend line, reverse off of it, and then reverse off of the next support level to just then break out. And that's when you have enough momentum in the rally to fuel that kind of a break. But now let's see where that takes us. I think the momentum is starting to wane down, but we definitely could continue on higher. Right now, I do not, I close my position, my short position out here when we broke the downtrend line. If you remember my last video, I mentioned I was short here at the downtrend line, which was the objective thing to do. I shorted it down with this big red candle. When I saw that it bounced off of the support level, it's a good idea to close out your shorts when you see there's no follow through in the downtrend. Obviously, this is YouTube, so I can't make live updates on my positions. I wish I could to help you guys, but unfortunately, that's not quite easy to do on YouTube. So I'm trying to figure out a way to make some type of website to post live information for you guys. I had many comments of people asking me, if I do a mentorship, or if if they can get into contact with me more easily. Obviously, I can't be in contact with email with all my subscribers, so this type of website would definitely help that. So stay tuned for that. I'm working on it actively. So what else do I see here? I see two very important levels on crude oil, and these are the two levels that I noted actually right here, this 56 level and the 60.7 level. And we are sandwiched between these two levels. You can see we've had so far two reactions. Well, we broke this level right here. We then reacted off the 60.7 back down to the 56. Basically, we are bouncing up and down within this range, and in my honest opinion, I think these are the two levels to watch, and until crude oil has broken one of these levels, I'm not going to take a position in it. I think if we break to the upside, it would be definitely bullish. Although I'm going to be very skeptical of the bullish case in crude oil because, as you know, I am short in the market. Well, I'm not short in the market, but I'm building a big short thesis in the market. I think it's gone, it has made a false breakout if you saw my last video. And if that's the case, then crude oil is likely to go down with the markets. If you haven't noticed, crude oil has been extremely correlated to the markets. You can see it tops right when the market tops and it bottomed right when the market bottomed. So I wouldn't be surprised if the markets start to drop, crude oil resumes its downtrend. So if we break to the upside, we'll obviously would definitely be bullish. You could take a small position, but always be careful and always keep an eye on the markets, just because of how correlated they are. If you're investing in both of them at the same time, you're basically leveraging your position to the times two. And if it breaks to the downside, hopefully the markets will give in around at the same time that crude oil breaks this 56 level. That would be a sign of further downtrend. That would definitely, we'd have to undercut these lows to send us the message that sellers are stepping in, and the selling will get more and more impulsive as we get towards this range. You can see right here, right at this point, right under where we stopped here, there is almost no support whatsoever, no recent support. So the next stop under right here is this. So under us we have two support levels. This 51 level right here, you can see a few reactions. That's actually good support level. And one right here. So if we start breaking down here, next stop here, and then next stop here. So I'm obviously going to keep you guys up to date as much as I can, but just know that I am most likely going to open a short position if we start to break down below this level, and these are my two targets for crude oil. But again, watch out, because the markets are being extremely bullish for now. For now they are bullish, and we have just broken a downtrend line. So objectively, just looking at this chart as a whole, crude oil has made its correction, and it has just broken the downtrend line and is more than able to continue its trend up. So my bearish thesis is solely based on the stock market position right now, which for me is bearish. So crude oil is very complicated in that sense. I wish it was just completely uncorrelated to the market, and that would enable traders to trade it separately to the markets and not have to consider both of them at the same time. But unfortunately, that's not the case. So that's all I wanted to say on crude oil. I hope you enjoyed the video. Make sure to like and subscribe if you enjoyed it. In the meantime, good luck on your trading, and see you next time.